Hello, this is Jordan. This video is being recorded on the morning of Tuesday, August 13th, 2024. Thank you so much for joining me. And in this video, you guys know how much I like gold against the 60/40. In this video, I'm going to show you 5 brand new charts that I have that revolve around gold in the 60/40 portfolio. So these are new charts. I have not shown these yet, or at least not anytime recently. So let's get right into the video. So number one, this is the 60/40 portfolio versus gold. You know, I like to use gold first in everything I look at, but when you're using ratio charts, it's also important to invert them and look at what you're looking at as a numerator or the denominator. So this is flipped around, and I have to tell you, this looks even more bullish, I think, for gold. So again, this is 60/40 divided by gold. And these lines are, I just marked here, these were the bottoms in gold. I guess I could have marked this or this, but I decided to mark this one. So that's that explanation. But here we can see right here was really the confirmation of a new secular bull for gold. It's a little harder to see here. The chart we normally look at, it's more clear. So that's more difficult, but wait, I'm looking at the wrong thing. It's right here. I should have put the line right here. See how this is confusing. But so anyway, so this is 60/40 divided by gold, and this is the I should have put the line right there. So I apologize for that. I had caught myself. And here, this is where we are now. This is really interesting. We can see, you know, I've been putting the line here on the other chart where gold is getting close to kind of breaking this area right here, but then it still has this line to deal with. So maybe we see a move down here, a little bit of a rally, and then you get that move down. That's when you have gold going to 4,000, 5,000, etc. So anyway, this is the first chart. I apologize for mixing this up. Now when I'm done, I can put the line in right here. Okay, number 2. So this is silver against the 60/40 portfolio. I don't think I've shown this yet. I could have put it in a brand new image without gold and gold against the 60/40, but just for more context, I wanted to include these. So again, this is gold against the 60/40, silver here, silver against the 60/40. So these lines, we have, the first one is gold bottom, then that's confirmation of a new bull. That's the top, gold bottom, confirmation of new bull, top. So here we have the bottom. Again, I could have put it right there. I mean, there's a couple different options I could use. No confirmation yet. So we're waiting for a big move higher like that. And then, of course, we still have this. I can start to include that line. And I showed it in the other chart. It's more apparent in that chart. So no confirmation yet. Is there anything we can tell from silver against the 60/40? Well, silver actually bottomed against the 60/40. This is right when we had the bullish confirmation right here. So that was the bottom. Here, probably need to use a magnifying glass. It looks like silver against the 60/40 bottomed a little bit before the confirmation that we got right here. So where are we here and now? Silver against the 60/40, it's like gold. It's trying to break out from resistance here. Does that tell us anything about silver in nominal terms? Well, silver in nominal terms bottomed right here at the same time. And here, again, so it's interesting. You know, let me know in the comments what you guys see. Obviously, if we get a big move up like that, you know, we get the big move like that in gold against the 60/40, that's going to, you know, pull this to a breakout, and that could pull silver back to 35. And depending on how big that move is, you could push silver all the way to 50. So that's the second chart. Okay, number 3, gold stocks against the 60/40. So Barron's Gold Mining Index here, Barron's Gold Mining divided by the 60/40. Here's GDX against the 60/40. Just because this is obviously a more important index for gold stocks now than the Barron's Gold Mining Index. And in some other charts I've noted, like the gold stocks in the 1960s, really, they're mirroring gold's performance right now. I mean, this breakout here, I've said, is akin to gold's recent breakout, breaking out of the cup and handle. This breakout was at the end of 64, early 65. And so we can see gold stocks against the 60-40. Wow, this was in a range for 16 years. And then it finally broke out here, 1965, a little bit after this one. But look, this is master of the obvious statement. But if we're going to get a big move in gold stocks, or like a really big move in gold to not just 3,000, but 4 or 5, maybe 6,000 in the next 3 or 4 years, you're going to have to outperform the 60-40. So that's why these ratios are so important. So I see this period here as similar to this period. Now, we don't have as clean, we don't have as clean of a breakout potential as we do in this chart, but we'll see. We'll keep an eye on that. So that's the third chart. Here's number 4. I love this chart. So this is the 60-40 portfolio adjusted for inflation. So this is a 60-40 portfolio divided by the CPI. And then we have gold down here. So what's interesting, here's that gold stocks breakout we just talked about, was right here. Here's the gold breakout right here. Does that mean this is going to top and go like that? That's one way to look at it. Another way is, if we're making a historical comparison, we see this right here. Where are we? Is this the best comparison right here? The early 70s? Is it right here? Are we at 1967-ish? Again, let me know what you think. You tell me in the comments what you think. But just one more thing about this chart. It's so amazing to me. I'm going to have to double check this. So again, this is a 60-40 portfolio divided by inflation. So this is inflation adjusted 60-40 portfolio. I know I said that multiple times. This thing from 1965 down to 81, 82. This was down 50%. I'm not joking. This was down 50%. Like, what a dumpster fire this portfolio was in this inflationary period. This right here, this secular bear, it was only down 20%. And I looked at the Great Depression. The Great Depression was not as bad as this because bonds were going up, and bonds were going up here. The reason why this was so bad was because you had both stocks and bonds in secular bears. Again, right here, minus 20%, bonds were still going up. This was only stocks and a secular bear. Same thing from 1929 to 42 is this. In bonds, actually, the Great Depression did better than they did here. But it just, because we hear this talk about, bonds are not great anymore. I'm just going to go in stocks for the long run, stocks are inflation hedge. No, they're not. This was awful. I mean, there's a serious code red risk. Like, this is what's coming over the next 15 years. And you could just go back and see how bullish everyone was on stocks right here as inflation just started to move. But, I've just said enough. It's just fascinating what could be coming for these people who just think you can just use the S&P and ETFs like a savings account. You dollar cost average every month. How did that work out for this generation? But yeah, I'm passionate about that. Okay, last thing. This is gold against another 60-40 fund. This is a BlackRock fund. So this looks even better than gold against my 60-40 calculation. So I don't know if this fund is a little bit off. I don't know if they're not getting their total return is not as good. So I don't know why it looks a little different. But I'm just saying I trust mine more because this one actually looks more bullish than mine. So we'll go with mine. But people, this is amazing. This is a massive bottoming pattern. This is over 10 years. We're going to look back, and this is a massive double bottom here. I mean, yeah, I know it looks like some kind of head and shoulders. I mean, it's really complex. Sometimes you have the shoulder here. Sometimes you get the double head. So, again, double bottom. I mean, this is technical porn for people like me. You know what I'm talking about. But the point is, this kind of a base, this is going to lead to a huge move up like this. So those are the 5 charts. All right. Thank you for staying with me. If you did, through that entire video, my explanations. Really appreciate it. Let me know what you think in the comments. And I'll talk to you guys again in the next video.